The Monetary Policy Committee met on 2nd, 3rd and 4th June 2021 and took stock of the evolving macroeconomic and financial conditions as well as the impact of the COVID wave, the second wave of the COVID on the economy. Based on its assessment, the MPC voted unanimously to maintain status quo, that is keeping the policy repo rate unchanged at 4%. The MPC also decided unanimously to continue with the accommodative stance as long as necessary to revive and sustain growth on a durable basis and continue to mitigate the impact of COVID-19 on the economy while ensuring that inflation remains within the target going forward. The marginal standing facility, that is MSF rate, and the bank rate remain unchanged at 4.25%. The reverse repo rate also remains unchanged at 3.35%. Provisional estimates of national income released by the National Statistics Office NSO on May 31st placed India's real GDP contraction at 7.3% for 2021, with GDP growth in fourth quarter at 1.6% year on year. The forecast of a normal southwest monsoon, the resilience of agriculture and the farm economy, the adoption of COVID-compatible person operational models by businesses, and the gathering momentum of global recovery are forces that can provide tailwinds to revival of growth, revival of domestic economic activity when the second wave abates. On the other hand, the spread of COVID-19 infections in rural areas and the dent on urban demand poses downside risks. India's exports in March, April and May 2021 have launched into an upswing. Conducive external conditions are forming for a durable recovery beyond pre-pandemic levels. The need of the hour is for enhanced and targeted policy support for exports. It is opportune now to give further policy push by focusing on quality and scalability. Notwithstanding the sequential decline of indicators of rural demand in April, rural demand is expected to remain strong as forecast of a normal monsoon bodes well for sustaining its buoyancy going forward. The increased spread of COVID-19 infections in rural areas, however, pose downside risks. Taking all these factors into consideration, real GDP growth is now projected at 9.5% in 2021-22, consisting of 18.5% in first quarter, 7.9% in second quarter, 7.2% in the third quarter and 6.6% in the fourth quarter of 2021-22. Now turning to the outlook for inflation, the favorable base effects that brought about the moderation in headline inflation by 1.2 percentage points in April may persist through the first half of the year, conditioned by progress in monsoon and effective supply side interventions by the government. Upside risks to inflation emanate from persistence of second wave and consequent restrictions on activity on a virtually pan-India basis. In such a scenario, insulating prices of essential food items from supply side disruptions will necessitate active monitoring and preparedness for coordinated, calibrated and timely measures by both center and states to prevent emergence of supply chain bottlenecks and increase in retail margins. Taking into consideration all these factors, CPI inflation is projected at 5.1% during 2021-22, and this consists of 5.2% in the first quarter, 5.4% in second quarter, 4.7% in third quarter and 5.3% in the fourth quarter of 2021-22, with risks broadly balanced. During the current year so far, the Reserve Bank has undertaken regular OMOs and injected additional liquidity to the tune of 36,545 crore up to May 31st, in addition to 60,000 crore under GSAP 1. A purchase and sale auction under Operation Twist has also been conducted on 6th of May this year to facilitate the smooth evolution of the yield curve. Going forward, the Reserve Bank will continue to conduct regular operations for liquidity management. Taking these developments into account, it has now been decided that another operation under GSAP 1.0 for purchase of G-Secs of rupees 40,000 crore will be conducted on June 17th, 2021. Of this, 10,000 crore would constitute purchase of state development loans, SDLs, that is the borrowing done by the papers, the borrowing done by the state governments. It has also been decided, I repeat, it has also been decided to undertake GSAP 2.0 in the second quarter of 2021-22 and conduct secondary market purchase operations of rupees 1.20 lakh crore, that is rupees 1,20,000 crore, to support the market. The specific dates and securities under GSAP 2.0 operation will be indicated separately. As of last Friday, the country's forex reserves had touched 598.2 billion US dollars, and this is a figure which will be announced which will be announced as a part of our weekly statement later today. So it can be seen that we are within the striking distance of reaching $600 billion of reserves, and the indications are that we have already crossed 600 billion, but let the figures, after duly verified, let it be released. And as you know, the figures for this Friday will be released next Friday. So it is our expectation that based on current assessment, we feel that our reserves have already exceeded 600 billion US dollars. In the year gone by, the Reserve Bank has engaged in safeguarding the economy and the financing system from the ravages of the pandemic. We have been on continuous vigil through the first wave, the lull between the waves, and now in the second wave. Maintaining financial stability and congenial financing conditions for all stakeholders is a commitment that we have adhered to assiduously. The sudden rise in COVID-19 infections and fatalities has impaired the nascent recovery that was underway, but has not snuffed it out. The impulses of growth are still alive. Aggregate supply conditions have shown resilience in the face of the second wave. We will continue to think and act out of the box, planning for the worst and hoping for the best.